Good morning, it's Market Day Report. We're almost to the weekend, and we're almost to the final trading session of this week. How about the overnight session? What did we do? We'll start with corn. And the corn market down a penny at 424 3/4. And again, this is a market that's been, well, it's been down, I guess, let's see, 5 out of the last 7 sessions. Now, it was higher yesterday in the day trade, but again, the trend here has been lower, and that's where we were overnight. How about beans? Overnight session mix 10-12 for the new crop and front month as it slipped a quarter penny. Wheat market? Well, you know, wheat actually closing higher yesterday, but the same story as corn, as it's been lower 5 out of the last 7, 4 1/4 lower on the December contract in Chicago. The Kansas City at 509 1/2, down 2 3/4. And finally, the cotton market down 5 points, 66.23. Well, the president of Midwest Market Solutions is Brian Hoops. All right, Brian, spent a little time looking for a flash sale. Didn't find one. Is this 2 days without flash sale announcements?
Yeah, good morning, Tony. Yeah, no sales this morning. 2 consecutive sessions without that flash sale report this morning. So, yeah, a little bit disappointing maybe, but next week's export sales should be real strong for corn, as we've had 3 sale days this week, and that's going to be reflected in next week's exports. So that'll be very strong once again. Probably keeping us on that pace that we noted yesterday. We're on a record pace of exports so far this marketing season. Soybeans not faring so well. We haven't had any private export sales. Our export sales announcements yesterday showed us at lowest pace in 17 years. Wheat was the best pace in 9 years. So there is some positives here. It's not all doom and gloom as far as our export markets go. Wheat and corn are showing some decent strength, while soybeans are really lagging. And notably absent has been China. And that's been everything everyone's talking about is China being absent of the market. And really not a surprise with the tariffs. Plus, you have a big crop out of South America that they can buy a lot of product from. Argentina, obviously, they're still selling product there. They sold a reported 40 cargoes of soybeans this week to China alone. So we go into this weekend without a lot of news. It's going to be a very active harvest weekend. I drove up from Springfield to Des Moines last night, didn't hardly see anybody in the fields. There's a little bit of action going on, but I think as we get warmer temperatures, fields dry out a little bit more, we'll start to see more and more producers getting out in the field. So we do expect to see some pre-weekend type harvest pressure that hits the grain markets today, maybe into the closing bell. As next week, we're starting to see, just more activity. And then Tuesday's quarterly stock small grain summary report will be released on Tuesday morning. That kind of gives the market a next report to look forward to.
All right, Brian, hey, hang on just a moment. We'll come back. We'll talk livestock futures, and we'll talk about the trends in cash trade. I'll give you a hint. They're going lower. Market Day Report continues in a moment. Well, the trend has been lower. We'll talk cash trade in just a moment. How about the live cattle futures? 3 straight sessions in the red. We finished yesterday. Front month off 202 at 232.02. Feeders have been lower 2 straight sessions, losing 602 on the October at 353.60. November down over $6 as well. And then the hogs yesterday settling mostly higher in mixed trade, up 70 on the October, $100.12 a hundredweight, in front of a quarterly hogs and pigs report. Brian Hoops, President, Midwest Market Solutions. All right, let's start first with cash trade for cattle.
Yeah, it was lower yesterday, and we noted last week that the North and South had reached par, and that was pretty unusual because North had been trading premium to the Southern trade for many, many, many months. And this week, we're seeing a lot of weakness in the Northern trade, but in the Southern Plains, not as much weakness. We're about $5 premium to the north. We traded 237 yesterday, $2 to $3 lower than the previous week. But in the north, we're down to 232. So we're losing a lot of ground there. Supplies are much larger in the north all of a sudden. It used to be where supplies were much tighter in the north, and we were bringing cattle from the south to kill into the northern plains. That's not the case any longer. Dress trade was about 365, so we're a good $5 to $6 weaker than we were a week ago. And that comes at the expense of cutout values continuing to decline. We're down at least $10 on the week in the choice, and they seem to be kind of in this free fall mode. Packers really have not cut their kills trying to prop up the box beef yet. We're down from last year, but we're very similar week to week as far as our kills go here in the cattle market. Now, the hogs probably going to receive a real boost on the opening. A lot of times the hog report is just a real sleeper type report where we have the pre-report guesses and the actuals match up very closely. This time, that's not the case. The pre-report guesses are much, much higher than the actual numbers. And so we're likely to see several dollar gains on the opening in the hog market this morning. We're 2 to 3% below estimates on those numbers as far as kept for breeding and all hogs and pigs and kept for marketing. So it looks to be a stronger opening in a hog market, probably a little softer in the cattle.
All right, Brian Hoops, Midwest Market Solutions.